they banned silver exports from China, except for companies that were licensed by the Chinese state, which is to say their friends and relatives. They've licensed 44 companies to export silver, which is, the sort of rent speaking that you might expect when 10,000 people rule 1.4 billion people. But nonetheless, that will, I think, continue to disrupt the silver market. I, I also might mention that outside of the monetary realm, where I'm more conversant, silver delivers a lot of utility in fabrication processes. My good friend Frank Giustra quoted a source suggesting that there's no demand elasticity in silver use for solar up to $135 an ounce, which is to say the reflective properties of silver and the ease with which it is used to coat solar panels means that no significant substitution and no significant fabrication changes will come into the market unless the silver price goes above $135 an ounce. In terms of the performance in 2025, really, it was delayed performance that should have occurred much earlier. The the stage was set for gold in 2021, 2022. It's worth noting when people say that gold's moved recently, gold has moved 9% compounded annually since the year 2000. When people ask me when the gold bull market begins, I'm forced to say, based on my own portfolio, 25 years ago. So I think that's important to understand. Gold and silver, and to a lesser extent copper, were coiled springs. Copper, by the way, and we'll talk about this later, is still a coiled spring. I don't expect the manic performance of 2025 to be repeated, because the tension that was on the spring, so to speak, has been released. A move in gold from 2000 to 4000 removes a bunch of the undervaluation. I believe over the next 10 years, gold will go up, and we can talk about that later, and it'll grow up substantially. But I don't think we're going to see 100% compound moves in gold. I must say, when I was reviewing 2025, New Year's Eve this year, I sort of have a meeting with myself every year. And at least materially, I looked back on 2025 with some fondness and some awe. And make no mistake, I expect that 2026 is going to be a good year for natural resource investors. But to the extent that their expectations are set on a repeat of 2025, I think they're going to be woefully disappointed.
Great point to make there. Of course, 9% compounded since the year 2000 for gold. That's an incredible long-term track record that we're looking at. When we look at silver currently, it seems to have really hit the mainstream, and people are advocating for a shortage of physical. When you are looking at that, Rick, do you think we are really seeing a fundamental shortage on the supply and demand? And what are you making of silver currently?
Depends on which buyers you're talking about. For the very large buyers, like my former employer, Sprott, where I'm still the largest shareholder, when they need to buy lots of silver for the Sprott physical trusts, they can buy it. When retail people try to buy 1 ounce bars or 10 ounce bars through retail channels, they have a very difficult time. And there is structural disruption in the traditional silver markets, in particular in the COMEX, which is a paper market. That market was structurally over leveraged. Oh, some days the market traded contracts that were equal to 200 times the amount of silver available for good delivery. It didn't matter for 50 years because the silver didn't deliver. The paper contracts settled in paper. They were rolled over. What happened just very, very, very recently is the LBMA and European markets found themselves structurally short of silver. And the spot price for silver was 4 or 5% higher in London than it was in New York or Chicago. So people started taking delivery because they could make 4 or 5% overnight. Simultaneously in the US, the lease rates for silver. Many people don't know that there's a lease market for silver for jewelers and industrial users, fabricators. The lease rates went from 3.5 or 4% to 40% because the people who had been holding silver for lease, myself included, at the end of the lease term, which are very short term, sent the silver to London to make 4% overnight. These are disruptions that are temporary in nature. The disruption that's less temporary in nature, I think, is the coming multipolarity in silver markets. The silver used to be controlled in London and in the U.S., New York and Chicago. It's estimated now that 25% of the physical silver that trades in Dubai. That's a big, big, big change. And a bunch of silver trades in China. China, in addition to being a large silver producer, is the largest refiner in the world. About 65% of the world's refined silver comes out of China, which means that Chinese export sanctions don't just apply to silver produced in China, but rather silver processed in China. And the Chinese apparently have come to believe that silver is, like other materials, as much an industrial and strategic material as it is a monetary metal. Now, you have to read a couple of other things into the Chinese action. They banned silver exports from China, except for companies that were licensed by the Chinese state, which is to say their friends and relatives. They've licensed 44 companies to export silver, which is, the sort of rent speaking that you might expect when 10,000 people rule 1.4 billion people. But nonetheless, that will, I think, continue to disrupt the silver market. I also might mention that outside of the monetary realm, where I'm more conversant, silver delivers a lot of utility in fabrication processes. My good friend Frank Giustra quoted a source suggesting that there's no demand elasticity in silver use for solar up to $135 an ounce, which is to say the reflective properties of silver and the ease with which it is used to coat solar panels means that no significant substitution and no significant fabrication changes will come into the market unless the silver price goes above $130 an ounce, $135 an ounce. So it's important to note that the utility of silver in applications like germicides, water treatment, and solar means that there's a lot of structural inelasticity around demand at what are frankly sharply higher prices.
Yeah, that's a great point, of course, on the demand side, that these manufacturers are not really that responsive to price increases because it's a small part of their total input cost. Talking about the supply side, what we oftentimes hear is that silver is produced mostly as a byproduct metal. A small component doesn't really move the needle for a lot of these producers. Do you think even at $80 we will see limited additional supply? You would reckon that at least some people are incentivized to produce more?
You will see some increase in primary silver production. That will happen. But primary silver production last year was about 18% of total supply, well after recycling and byproduct production. I think that looking out over 5 years, the increase in the copper price will have a lot more to do with increased silver production than the increase in the silver price. If we were ever to see, again, a good market for lead or zinc, there's a lot of silver produced as a byproduct of lead and zinc deposits. Increases in copper, lead, and zinc production would have more of an impact on the supply side with regards to silver than increases in the silver price, paradoxically. Where the increase in the silver price really comes into play, and I remember this in the 1990s, a fairly large amount of physical silver is held outside the market in India. And if you have increases in the dollar quote in silver, combined with a decrease in the rupiah quote in US dollars, you get a parabolic move in silver in India. It's held as a store of wealth by poor people. Back when you were a very, very young man, I dare say a boy, Warren Buffett owned 15-20% of the world's above ground stocks of silver. When the market found that out, the market doubled and then, went up another 50%. And all of a sudden the market crashed. The Indian rupiah fell by 50% against the US dollar. And the silver price was up well over 100% in US dollar terms. So silver in Indian terms, in rupiah terms, was up by 400%. And that corresponded to, and I forget what it was, either a drought or a flood, but a bad harvest for the Indian peasantry. And they had the choice between keeping their silver, which was up 400%, or feeding their families. Pretty easy choice.
Definitely easy choice. So I think with this bull market in silver as well, that will keep a lid on the price. If it goes up too much too quickly, these people are incentivized to sell and increase their personal wealth.
I think that could be. It really depends on, things are apparently, I'm not an expert on India, things are getting better in India. So it could be, on the other hand, that an increase in wealth in rural India in particular leads to a structural increase in silver demand. I don't know the answer to that. I'm speculating. I do know from having been to Dubai a lot that a bunch of the physical demand for silver in Dubai is Indian, either from Indian guest workers or from, how would you call it, fishermen. It seems that there's an excise tax on silver, and sometimes Gujarati fishermen in Dubai set off from Dubai with fishing boats that happen to have some silver, and fishing boats from Gujarat set out in the Indian Ocean, and they meet, and somehow Dubai silver becomes Indian silver, pre-tariff.
Interesting dynamics, that's for sure. Rick, with silver going as parabolic as it has been going in recent times, how are you looking at the metal currently? Is it time to, offload and take some profits, or do you think it is still an interesting hold?
I think it depends on who you are and how long you've owned your silver. Whenever I buy anything, I write myself a memo, page and a half long memo, that says why I'm doing it, what could go right, what could go wrong, what time frames am I looking at, what price expectations do I have, and what will I do if something goes wrong. I have some silver, well, not physical silver. I have Sprott physical trust silver, easy silver for me to own, which I bought because I thought that silver was underpriced and was going to pop. Well, my reason to own it has taken place. The stuff goes from $25 to 70, $80. And I look at my thesis and I looked at why I owned it. Well, why I owned it has occurred. You need to discipline yourself to sell when the circumstance that caused you to buy something has occurred, and not be greedy and hold on to the very last smidgen. Make no mistake, I save in gold. I maintain liquidity in US dollars, and I speculated in silver. And I am likely very soon, I haven't done it yet, but I'm likely very soon to sell the silver that I bought in anticipation of just this event.